What you're about to hear might sound impossible, but it's happening right now as I speak to you. Silver has just shattered through $92 per ounce. Let me repeat that. $92. If you've been following precious metals for any length of time, you know this number is absolutely insane. This is not just another price movement. This is history being written in real time. 3 hours ago, when Shanghai opened for trading, something extraordinary happened. The silver price didn't just rise, it exploded. It burst through the 20,000 yuan per kilogram psychological barrier like it was made of paper. Traders in Shanghai watched their screens light up green. The price jumped $10 in a single session. That's an 11.7% move in hours. Not days, not weeks, hours. But here's what most people don't understand. This move has been building for years. And what happened today in Shanghai is just the beginning of something far bigger. By the end of this video, you're going to understand exactly why silver hit $92, why it's not done yet, and what this means for your money, your savings, and the global financial system. Let me take you back for a moment. In January 2025, exactly 1 year ago, silver was trading at $29 per ounce. $29. If you had bought silver then and held it, you would have more than tripled your money, a 200% gain in 1 year. That's not normal. That's not even close to normal. The stock market dreams of returns like that. But silver just delivered it. Now, I know what you're thinking. Why is this happening? What changed? And that's exactly the right question to ask. Because silver doesn't move like this for no reason. There are massive structural forces at work here. And once you understand them, you'll see why $92 might actually be cheap compared to where we're heading. Let's start with the most important factor, supply and demand. It sounds simple, but the story here is shocking. In 2024, global silver demand reached 1.17 billion ounces. That's billion with a B. But here's the kicker. Mine supply only produced around 670 million ounces. Do the math. That's a deficit of 500 million ounces in a single year. 500 million ounces more silver was consumed than was dug out of the ground. Now you might think, okay, that's one bad year. Surely that's an anomaly. Wrong. This is the 5th consecutive year of silver supply deficits. 5 years in a row where the world consumed more silver than it produced. And analysts are already predicting that 2026 will be year number 6. This is not a temporary imbalance. This is a structural shortage. But wait, it gets more interesting. Where is all this silver going? It's not just sitting in vaults. Silver is being consumed permanently. Unlike gold, which mostly just moves from one vault to another, silver is actually used up in industrial applications. And this is where the story gets really compelling. Solar panels. Every single solar panel requires silver. The photovoltaic cells that convert sunlight into electricity need silver because it's the most conductive metal on Earth. And right now, the world is in the middle of the biggest solar energy build-out in human history. The International Energy Agency projects that global solar capacity will quadruple by 2030. Quadruple. That means 4 times as many solar panels, 4 times as much silver demand. And that silver isn't coming back. Once it's in a solar panel on a rooftop in California or a solar farm in India, it's gone from the market forever. But solar is just the beginning. Electric vehicles need silver. Every EV has about twice as much silver as a traditional car. Data centers need silver. Your smartphone has silver in it. Medical equipment uses silver for its antibacterial properties. 5G networks require silver. The green energy transition that every government on Earth is pushing requires absolutely massive amounts of silver. And none of this demand is going away. It's only accelerating. Now let's talk about what happened on January 1st, 2026, just 12 days ago. China, which is the world's largest silver consumer and a major producer, implemented export restrictions on refined silver. Read that again. China restricted silver exports. This is the supply shock that the market had been whispering about for months. And today, we're seeing the consequences play out in real time. When China restricts exports of a critical commodity, it sends a message to the world. That message is, we need this. We're keeping it. And if you want it, you're going to have to pay up. Beijing doesn't make moves like this unless they see something we don't. They have data we don't have access to. They have strategic plans that span decades. And they just told the world that silver is too important to let leave their borders. Think about the implications. China is home to massive electronics manufacturing, solar panel production, and a rapidly growing EV industry. They need silver. Lots of it. And they just cut off the rest of the world from Chinese supply. That means every other country now has to compete for a smaller pool of available silver. And when demand stays high but supply shrinks, there's only one direction for price to go. But there's another layer to this story that most people are completely missing. Let's talk about money. Real money. For thousands of years, silver was money. It wasn't a commodity. It wasn't an investment. It was literally what people used to buy bread, pay taxes, and settle debts. The word silver and the word for money are the same in many languages. In French, argent means both silver and money. That's not a coincidence. Today, we live in a world of fiat currency. Dollars, euros, yen, yuan. None of them are backed by anything physical. They're backed by trust in governments and central banks. And here's the uncomfortable truth. That trust is eroding fast. Over the last 4 years, we've seen money printing on a scale that would have been unimaginable a decade ago. The US Federal Reserve's balance sheet exploded. The European Central Bank did the same. China injected trillions of yuan into their system. And all of that new money has to go somewhere. When people lose faith in paper currency, they look for alternatives. They look for real assets, hard assets, things you can hold in your hand, things that can't be printed. And throughout human history, when people wanted to preserve wealth, they turned to two things, gold and silver. Gold has gotten a lot of attention. And rightfully so. Gold hit $4,000 per ounce in 2025. Then it blew past $4,400. It's been on an absolute tear. But here's what's fascinating. Silver is outperforming gold by a lot. Gold is up about 64% from its 2024 lows. That's a phenomenal performance, but silver is up over 170%. It's more than doubled, and the gap is widening. This is what precious metals analysts call the gold-silver ratio compression. Historically, the ratio of gold price to silver price has averaged around 60 to 1. That meaning 1 ounce of gold buys you 60 ounces of silver. But earlier this year, that ratio was over 80 to 1. Silver was historically cheap relative to gold. Today, with silver at $92 and gold at around $4,400, that ratio has dropped to about 48 to 1, and it's still falling. What does this tell us? It tells us that silver is playing catch-up. It's been undervalued for years, and now the market is correcting that imbalance. And if history is any guide, silver doesn't just catch up to gold, it overshoots. In previous precious metals, bull markets, we've seen the gold-silver ratio drop all the way down to 30 to 1, or even 20 to 1. If that happens again, and gold stays where it is, we're talking about silver prices of $140 per ounce, or higher. Now let's talk about what happened in Shanghai specifically. Because the way this unfolded today is extremely revealing. Silver broke through 20,000 yuan per kilogram. That's a massive psychological level. In trading, psychological levels matter. They're like walls. Prices often struggle to break through them. Think of 10,000 on the Dow Jones, or 30,000 on Bitcoin. These round numbers become barriers, and when they finally break, the move accelerates. 20,000 yuan per kilogram was that barrier for silver in China. Traders had been watching it for weeks, and this morning, when Shanghai opened, the dam broke. The price didn't just tick above 20,000, it smashed through it. Within hours, it was trading above 20,500. That converts to over $92 per ounce in US terms. The volume was enormous. Everyone wanted in. And here's the thing. This wasn't driven by speculators or paper traders. This was physical demand, real people and real companies buying real silver. Shanghai is not like New York or London, where most silver trading is paper contracts. In Shanghai, the market is primarily physical. When you buy silver on the Shanghai Gold Exchange, you can take delivery, you can walk away with the actual metal. And that's exactly what's happening. Warehouses in Shanghai are being drained. Inventory levels are at their lowest since 2015. The silver is leaving the vaults. It's going into industrial use, into jewelry, into private hands, and it's not coming back. Now, here's where things get really interesting. Let's talk about the disconnect between the paper market and the physical market. In New York, silver trades on the COMEX exchange. In London, it trades on the LBMA. These are massive markets where banks and hedge funds trade silver futures and options. But here's the dirty secret. Most of that silver doesn't exist. It's paper, it's contracts. It's promises to deliver silver at some future date. And there's a lot more paper silver than there is actual physical silver. Estimates vary, but some analysts believe that for every 1 ounce of physical silver, there are 100 ounces of paper claims on that silver. Maybe more. This works fine as long as nobody asks for delivery, as long as traders are content to just settle in cash. But what happens when people start demanding physical metal? What happens when buyers say, no, I don't want cash, I want the actual silver? That's when the system breaks, and we're starting to see cracks. Premiums for physical silver coins and bars have been rising steadily. The spread between the paper price and the price you actually pay for a physical coin has widened. Dealers are reporting delays. Mints are struggling to keep up with demand. And now, with Shanghai leading the charge at $92, the pressure on the paper markets is immense. If the COMEX price doesn't follow Shanghai higher, we're going to see arbitrage opportunities that are impossible to ignore. Traders will buy paper silver in New York at $80, take delivery and sell it in Shanghai for $92. That's free money. And when enough people do that, one of two things happens. Either the COMEX price rises to meet Shanghai, or the COMEX runs out of silver. Either way, prices are going higher. Let's zoom out for a moment and talk about what this means in the bigger picture. We are living through a historic shift in the global monetary system. The dominance of the US dollar is being challenged. Countries are settling trade in their own currencies. Central banks are buying gold at record pace. They bought over 1,000 tons in 2024 alone. That's the highest level in decades. Why? Because they're preparing for a world where the dollar isn't king anymore. And if central banks are buying gold, what do you think private investors are doing? They're buying both gold and silver. But here's the advantage silver has. It's more affordable. If you're a regular person trying to protect your wealth, a 1-ounce gold coin at $4,400 might be out of reach. But a 1-ounce silver coin at $92? That's accessible. That's something you can actually buy. And when millions of people around the world start thinking this way, the demand for silver becomes unstoppable. There's also a fascinating dynamic happening with younger investors. Millennials and Gen Z are buying physical silver in ways that previous generations never did. They've grown up in a world of money printing, financial crises, and distrust of institutions. They saw the 2008 crash, they lived through COVID, they watched inflation spike, and they don't trust the system, so they're buying hard assets. They're buying silver. And they're not selling. Social media has amplified this trend. Communities on Reddit, Twitter, and YouTube are sharing information about silver shortages, price movements, and investment strategies. The Wall Street silver community alone has hundreds of thousands of members. These are people who are actively buying physical silver and taking it off the market. They call themselves apes, and they have a simple strategy. Buy and hold. They're not day trading, they're stacking. And every ounce they buy is one less ounce available for industry, for jewelry, for anyone else. Now, let me address something important. Some people will look at silver at $92 and think it's too expensive. They'll say, I missed it, it's too late. But let me give you some perspective. In 1980, silver hit $50 per ounce. Adjusted for inflation, that's about $175 in today's money. So even at $92, silver is still 47% below its inflation-adjusted all-time high. It's not too late. It's actually still early if you look at it through the right lens. And here's another way to think about it. The total value of all the silver ever mined is estimated at around $1.5 trillion. That sounds like a lot until you compare it to other asset classes. The total value of all gold ever mined is about 14 trillion. The global stock market is worth over 100 trillion. Global real estate is worth over 300 trillion. Silver is tiny. It's a rounding error in the grand scheme of global wealth. And that means there's tremendous room for growth. If just 1% of global investment capital decided to move into silver, we're talking about an influx of trillions of dollars into a market that's only worth 1.5 trillion. The price impact would be staggering. We'd see silver at $200, maybe $300, maybe more. And that's not some wild fantasy. That's basic supply and demand math. Let's talk about some of the risks, because no investment is without them. Silver is volatile. We saw that today. An 11% move in a few hours. That kind of volatility cuts both ways. Silver can fall just as fast as it rises. If you're investing in silver, you need to be comfortable with wild price swings. This is not a stable, boring investment. This is a roller coaster. There's also the risk of government intervention. History shows us that when precious metals prices get too high, governments sometimes step in. In 1933, the US government actually confiscated gold from private citizens. They made it illegal to own gold. Could they do that again with silver? It's unlikely, but it's not impossible. Governments do unpredictable things when they're desperate. Another risk is the potential for a major economic slowdown. Silver has industrial demand. Remember, if the global economy crashes, if manufacturing collapses, demand for silver could fall. That would put downward pressure on prices. So while silver benefits from monetary fears and inflation, it can be hurt by deflation and recession. It's a double-edged sword. But despite these risks, the bull case for silver right now is overwhelming. The supply deficit is real. The industrial demand is growing. The monetary uncertainty is increasing. The physical shortages are accelerating. And now, with China's export restrictions and Shanghai leading at $92, we have a catalyst that could push silver into triple digits. Many analysts are now publicly saying that $100 silver is not a question of if, but when. Some are even more bullish. Felipe Geisels from BNP Paribas told CNBC he wouldn't be surprised to see silver well north of $100 in the not-too-distant future. Technical analyst Michael Oliver has suggested a scenario where silver reaches $100 to $200 by early 2026. We're already in early 2026, and we're already at 92. If you look at the charts, silver is broken out of a multi-decade consolidation pattern. It spent years building a base, and now it's in price discovery mode. There's no resistance above. No one knows where it stops. The next psychological level is $100, and after today's move, that target looks very achievable, very soon. Here's what I want you to understand. What's happening right now is not just a silver rally. It's a signal. It's a warning sign. It's the market telling us that something fundamental has changed in the global financial system. When a commodity that's been range-bound for years suddenly explodes higher, when it gains over 170% in 12 months, when it smashes through $92 in a single trading session, that's not noise. That's a message. The message is that people are losing faith in paper. They're losing faith in promises. They're losing faith in the idea that central banks can just print unlimited money without consequences. They want something real, something tangible, something that's been valuable for 5,000 years and will still be valuable 5,000 years from now. Silver is that something. It's real money. It's industrial demand. It's limited supply. It's all of those things wrapped into one shiny, conductive, precious metal. And right now, the world is waking up to its value. So what should you do with this information? That's not for me to say. I'm not a financial advisor. This is not investment advice. But I will say this: knowledge is power. Understanding what's happening in the silver market, understanding the forces at play, understanding the supply deficits and the demand drivers and the monetary dynamics, that knowledge puts you ahead of 99% of people out there. Whether you choose to invest in physical silver, whether you look at silver mining stocks, whether you explore silver ETFs, or whether you just sit back and watch, that's your decision. But don't ignore what's happening. Don't dismiss it as just another commodity rally. This is bigger than that. We are witnessing a historic moment in precious metals markets. $92 per ounce is not the end. It's the beginning. And in 5 years, in 10 years, when we look back at this moment, we're going to remember January 12, 2026, as the day silver broke free, the day it shattered expectations, the day it announced to the world that the silver bull market is real, it's powerful, and it's not stopping. The question now is not whether silver will hit $100. The question is how fast it gets there, and what happens after. Because if the fundamentals continue to play out the way they are, if supply stays tight, if demand keeps rising, if China keeps restricting exports, if the green energy transition keeps accelerating, if investors keep fleeing paper currencies, then $100 might just be a pit stop on the way to much, much higher prices. This is your moment. This is history happening in real time. And you get to watch it unfold. Or better yet, you get to be part of it. The choice is yours. But whatever you do, don't look away. Because what happens next in the silver market is going to be absolutely extraordinary. Thank you for watching. If you found this analysis valuable, make sure you share it. The world needs to know what's happening. And stay tuned, because I'll be following this story closely. Silver just hit $92. And this is only the beginning.